With the recent volatility in the Canadian real estate market, people are wondering, is this the bottom? Are prices going to continue to decline? What's happening with affordability? What's happening with interest rates? Should I go fixed? Should I go variable? Well, in today's Canadian real estate market update, we're going to dig right into the stats. We're going to show you the sales price averages, the days on market, what this means for you if you're a buyer, a seller, an investor, and we're going to just help you interpret it. My name is Justin Conoco, one of the owners of Prime Real Estate. We're located in southwestern Ontario, Canada, London, Ontario being the heartbeat of that entire market, but we do all asset classes of real estate, residential, commercial, agricultural. We do it all. So if you need a little bit of perspective, we can really give it to you in a balanced way. And I don't sugarcoat it. I tell you exactly what I'm seeing in my opinion of the market. I think there's a lot of dangerous information being shared by real estate agents that know what else to say other than the prices have bottomed. This is the best time to buy. They're not giving you the full core price of what they actually think is happening and how you can navigate this marketplace. So this is what I do on this channel. We also profile all the best communities to live in and share the pros and cons. We really want to give you honest real estate advice. So feel free to hit that subscription and that notification button. And if you want any specific videos, this channel is for the people. Drop it in the comments and let us know where you're from and what you want us to cover. But first, I'm going to dig right into the stats because I think this is always my favorite place to start. So I am sharing info sparks. I'm showing you what I see on the back end. And note, this is for ITSO. This is the largest real estate board in Ontario. So it comprises a whole bunch of different markets. I like showing this because it really does give you a snapshot of what's happening. We're going to go over sales prices. We're going to go over average price, days on market, and months of inventory. So you can obviously see this is a 3-year trend line, and it shows you from 2019 where average prices were 416. They spiked to February at 875, but they really did get flattened right back out. So this trend line, if I actually go to a 1-year mark, will show you that if I looked at December of last year, average price was 737. It spiked, it got flattened out right up until about June, but notice this little trend line changing, shifting a little bit. So all of a sudden the drop dropped from 680 to 670 and stayed flat at 670. That's something to note. Obviously, there was a spike in activity in August to September, but what does it mean for the market today? The other thing I wanted to indicate was days on market. So what's happening from a trend line perspective? Again, from April, average days on market was 7. You would list a property, it would sell right away, probably in multiples. So that was a fake number. Has spiked to about 22. But that number may be surprising to some people because they're seeing houses on the market for 60, 70, 80 plus days. And they're wondering, wow, it only takes 22 days to sell a house in this market. Keep in mind, it depends on where that house is located, how effectively it's priced, and marketing has changed completely with how you're actually trying to get your properties in front of people and generate activities. You may have 0 showings on your property, do an open house and get 15 groups through. Literally, we dust off our open house signs. We've been doing them every single weekend on our listings because it's generating showings when you're not necessarily seeing them booked. So something to note if you're a seller. Months of supply back from December, again, 0.3. This is directly correlated, spiked to about July, 2.7, dropped a little bit in August, and then seems to be going back up again. So that sales price flattening, if this months of supply continues, I would not be surprised if we saw it level back out, right? If we see an increase in months of supply, the sales price may continue to drop. Just something to note for the next month's market update. If you don't want to miss that, make sure you hit the notification button as well too. So another point that I wanted to note was homes for sale. So the actual number of homes that are on the market for sale, you notice that it spiked July, dropped in August, and seems to be trending back up. So that's the stats. Really like digging into that. You can go back to previous market updates to see how that's trending. The next portion, I want to go over the headlines. I think the major headlines that we're going to be addressing is on October 26th, there's going to be another rate hike announcement from the BOC. So they'll be making a statement as to what they're doing with the prime rate. And most pundits are believing they're going to increase rates about 0.5. They directly attribute this to what's happening with the inflationary rate. They did note, actually, I will share my screen one more time. They did note that global inflation may be starting to ease. They made an announcement that it's down to about 7%. But is this a lagging indicator, right? They're obviously dealing with consumer sentiment. They're really trying to put the brakes on the consumer spending, especially in the housing market. But inflation is related to energy costs, food costs, housing, and they're starting to see the gas prices and the prices at the grocery store starting to come down. Housing is going to be one of the most lagging indicators. And it does seem like they've gone from paying attention to the consumer sentiment to the data. So watch for their next announcement on the 26th to see where things are going to lead. If we were going to give you a prediction as to where we think this is going to stop in terms of the increased interest rates, a lot of people that we're talking to on the back end are thinking around spring if they can get inflation under control, which means they'll have to probably do 2 or 3 non-rate announcements before consumer sentiment starts shifting the other way. So if you're planning, you may be 12 months away from that shift actually starting to happen. But what's fascinating is as the prices continue to drop in the housing market, the lending costs are going up. So the houses aren't any cheaper. It's the equity that you have in your house. If you own a house that's starting to hurt you, where you're going to buy another house where the price maybe dropped $200,000 to $300,000, but the actual cost to own that property is very similar or more expensive in certain situations. This is where understanding that real estate, super important to know what's happening from a macroeconomic perspective. This is where I tell you, if agents tell you, oh, we're at the bottom, it's a great time to buy, I think that's terrible advice because that agent doesn't have a crystal ball. They don't know what's going to happen with inflation. So let's pretend we're going to be in a declining market for the next, call it 12 months and base our decisions off that. It doesn't mean that you shouldn't be buying, or it doesn't mean you should be buying. It should mean that you should be very dialed in, tightening your belt, making sure you know what you're spending, where you're spending it, and why you're purchasing that property. There are some incredible deals in some neighborhoods that I think people are going to look back on 5 to 10 years down the road and think about the time that they can get into that neighborhood now, where it's going to be completely out of reach for them. And I also think other people are just rushing into things without looking at what the next 12 to 18 months look like. So make sure you're working with a very dialed in team, making sure that your mortgage brokers, your lawyers, your accountants, your real estate agents have their head out of the sand. They know what's happening from a macroeconomic perspective, but they're also in a position to help you succeed from an individual deal basis. One note I want to make in this market update, we've noticed a big shift in between residential resale and new construction. All of a sudden, new construction, land costs haven't changed, hard costs haven't changed. Your price is kind of still going to be your price. Yet some of the best neighborhoods we've seen in our territories that you could not get into before, you can now get into for pennies on the dollar. And people are starting to realize that there's not as much work out there for renovation companies and so on and so forth. So people are getting into these established neighborhoods for a great price point. They're going to do some work to these properties and then benefit from the upside down the road. I can tell you, if people continue to do that, it's like kids playing soccer. They all rush towards a product type. That product type ends up getting more attention, more activity. And then the other product types, all of a sudden the builders are offering better price points. The trades aren't as busy. So the trades may give them a little bit of a lag and then adjust their pricings for the builders, which I hope they do, because they're definitely the ones that have been really feeling the pressure on the supply side of things. And the good ones are still doing really good work. Talking about a general activity and sentiment perspective, I can tell you that over the last 30 to 45 days, we have seen a drastic increase in activity. I think there was a cycle where people weren't getting what they wanted for your houses. They started renting them. So supply started getting cleaned out. I think we noticed that over the last month of inventory, either selling, getting taken off the market, or rented. And all of a sudden, buyers that are willing and able are definitely out there looking. We are seeing contracts on a daily basis. And we just came back from an investment seminar with Scott McGilvery, that whole crew, over 700 investors from across the country. And they're very balanced in their approach. They are writing a lot of deals, a lot of offers. Investors are going after large multifamily properties. They're not stopping. It's just a different set of rules, right? And the way that they're purchasing, they're being very dialed in on your numbers. Here's a quick tip for you if you're an investor. If you've been investing strictly based on the fact that you're getting passive appreciation and the numbers are going up and you cannot afford rate hike increases, you're not an investor. You're a speculator. You need to be paying attention to your actual cash flow and running your scenarios based on worst case, not just best case that the market's going to go up 20% a year, because that's not a real thing. If you look at 20, 25, 30-year trend lines, you should be running your passive appreciation at 3 to 5%, and you should know how to run an accurate analysis on an investment property, know what your expenses are, know what your income is, and know how to actually analyze the ROI. But again, every real estate deal is very specific. So this is just talking from a macroeconomic perspective. The last topic I want to discuss is fixed versus variable mortgages. We had this question come up a whole bunch of times lately, and people are asking, well, how come mortgage agents are all of a sudden switching and saying, well, you should go fixed? Understand, for the last couple of years, the variable rates have been much more incentivized. A lot of the banks were offering primo deals ongoing variable where they would actually cut the prime rate and want to sell you that package because it just made a lot more sense for them. With the fixed rate now being very competitive with the variable rate, a lot of people are looking at short-term fixed rates and knowing that I may be in an 18 to 24-month cycle and base their decisions off that. But again, you need to work with somebody that is paying very, very close attention to what's happening day to day, and they should be giving you these updates as well. If you need connections with any service providers or people that are specialists, reach out to me directly. All of my contact information is below. I'm very accessible on all of the channels, and I really want to be a bridge. I'm a people connector. We obviously specialize in real estate, but no, I don't care if you buy or sell anything with me. I do want a chance at actually pitching you because I think the way we do it's better than anybody else, but that's neither here nor there. I want to help the community connect them with the right people. So we're here for that. We'll jump into the Q&A and then we'll wrap up the video. So every single month we actually post it on our channels and we get a hit list of questions from people and then we answer them live on the market update. If you have any questions, just reply to the Insiders newsletter. If you're not on the newsletter, make sure you join it at the link below or find me on one of the many channels and we'll make sure to get your questions answered next month. So the first question comes from Zach Desjardins. He's a mortgage agent. He gets a lot of customers scared to purchase because of the uncertainty in the interest rates. No clear vision. From what I can see, they're going to continue to go up. My thoughts, I addressed it in the video. I think they're going to go up about a half basis point as of October 26th. That gives you the opportunity to get into a fixed rate now. So you can talk to Zach and he can line that up for you and then purchase before that date. Or again, just mitigate your plan based on that rate height and look at maybe a fixed rate mortgage so you can make a purchase understanding if you're buying that property, as long as you don't sell it within that next year to 2 or 3 or 4 years, you can plan accordingly. Alex Tappan had a question, mirror on the wall. Can you please send the next 10 years of overnight rates broken down month by month? That's impossible. If I did that, I would say unsubscribe. It's very unethical for me to say that I could watch it, but I can tell you I'm watching the inflation rate, I'm watching the Bank of Canada announcements, and I'm getting out of my comfort zone to make sure I'm staying on top of it. So watch this channel and maybe you can get that month-to-month update. Olivier Maurice, an amazing commercial real estate broker from Montreal, said the same question as always. People have fears of overpaying, not finding the correct property in a different market, same fears. It's always the same fears, right? Buyers are always concerned about overpaying. Sellers are always concerned about leaving money on the table. Buyer and seller's remorse is a real thing. Understand what's happening on the macro and then act in the actual micro. Why are you buying that property? What is its net effective gain or loss to you? And be very strategic about your approach. Anna Scott, a great past friend client. She does a ton in the lending space as well too. Fixed or variable is still a popular question. I'd say fixed, especially in the short term. Lindsay Call asked, are house prices going to come down more overall as the rates continue to increase? Tough to say. I mean, they did spike down, but they've really leveled out. So even as the increases are happening, it's almost like COVID lockdowns where people are used to the rate increases. So come back next month and I'll share the actual data of if the prices have come down. That's a great question. Chris Brunwick asked, will prices correct closer to where this all began? I actually think prices are back to where they were last year. They still spiked a bit from COVID, but I actually think that they're going to be trend lining upwards in the long term, maybe in the next 18 months, but I wouldn't be surprised if you look at 24, 36, 48 months, if we're still trending upwards like we have historically. Roger Good says, we just went through panic buying stage where FOMO ruled the market. Justin will be able to answer that better, but I believe it was about 18 months. Very accurate. I'd say it was almost two or 3 years that we saw this absolute mayhem in the housing market. Buyers are now reverting to the opposite. 100% accurate, Roger. I've definitely seen the buyer aptitude to make a purchase. Even if the house looks like a screaming deal, everything looks perfect, people are just afraid to make a mistake. So we've actually seen it swing the other way to a big degree. Do I think that will last forever? No. And during this time, a great real estate agent is well worth the money. I actually agree with that. Not just because I'm a real estate agent. I had this discussion with another agent the other day about how complex transactions could be and having somebody that actually understands the complexities of it. New development, for example, or new home construction. We just purchased an infill demolition, are doing a custom build with a new home builder with one of our clients. The agent at the other end of that deal helped us with the demo permit, the variances, making sure everything was there. We helped our client shortlist 3 builders, sign a deal for a custom home build, very complex. You don't have somebody that knows what they're talking about. That deal could have exploded 7 ways from Sunday. So good agents are undervalued. Bad ones are overpaid though. So don't assume that every agent's awesome. Make sure you're working with somebody who knows what they're talking about. Dan Isles asked, will rents start to come down at some point? Rents are escalating as the housing market's tightening, but I have noticed, I mean, they've gotten high and all of a sudden they seem to be petering out a little bit. Maybe they've reached their max. I don't think they have yet. I think with the housing market being difficult is going to continue to drive rents. but I don't think that that's something that can just continue to go up forever. So again, if you're an investor now making purchases thinking rents are going to go up forever, you want to mitigate that risk a little bit. Fred Connolly, my boy from down south, when will the bubble pop? If I had that answer, I would be a rich man indeed. I'm not a forecaster per se. I look at what's happening day to day. I definitely think consumers are back in the marketplace. So we have seen a pop in activity, but I want to monitor on a month-to-month basis to really give you the insights. And that concludes the monthly market update. So if you want to come back and hear what's happening next month, hit that subscription notification button. Again, this is a channel for the people. So feel free to reply. Let us know what information maybe I didn't cover that you want covered. Your biggest takeaways, where you're at in the buying journey, jump in the comments. More than anything, I want this to be a community and I want to start some conversation. So I guess the last thing I'll leave you with is my question for you. What is your number one question when it comes to the Canadian housing market? See you next month.